But it goes beyond what the academics also offer. How do we create the necessary platform? And one important link in actualizing or in translating the good intentions of AfCFTA into actual is through trade finance. Trade finance that includes all 8 aspects: the infrastructure, the institutions, and the market that facilitate the flow of funds from surplus spending units to deficit spending units in a cheaper, predictable, and sustainable way is what we are asking for. We know that for the private sector, their borrowing is sensitive to interest rates. So we are not merely talking about finance that is available. It has to be available, it has to be cheap, and it has to be predictable. That is the only way we can align trade finance to the business models of the private sector as they participate in the AfCFTA. And we can take this, that in the next 3 to 4 years, it's going to be tough for Ghana, it's going to be tough for private sector, even as the country prepares to present the budget, 2023 budget. For now, we don't know who will present it. It's always like multiple choice, this or that or whatever. Regardless of who presents the budget, we know that the 2023 budget would have to be tough because it's a budget that must meet multiple stakeholder expectations. The IMF is interested. What is their interest? The government must use the budget to demonstrate their commitment to greater fiscal consolidation that allows the fund to say that, okay, we've seen how you are using the 2023 budget to demonstrate your commitment to an IMF program, and it must mirror or reflect largely the broad-based fiscal adjustment that probably would have been agreed upon in the course of the Washington negotiation, which in itself would also feed into the staff level agreement. That is at one level. On another level, the budget must meet the expectations of organized labor across the different occupational groups who are asking for more. And because of inflation, enough is not enough now.
The least developed countries in the ACP region, everything but arms went to the EU, were supposed to go to the EU duty-free, quota-free. Question is, did we exploit it? Now, as a matter of fact, this period that I have mentioned, there's data that ACP export actually decreased instead of increasing. It's actually decreased from 3.4% in 1975 to about 1.5% by 1992. So instead of putting our act together and producing for export, creating wealth, creating employment, we did not. Why? We don't know. From the Lomé Conventions, which ended in 2000, we went to the Cotonou Partnership Agreement, which replaced the Lomé Conventions. And it started in 2001. Under that, we negotiated the Economic Partnership Agreement. When we were negotiating, every Ghanaian became aware, because we said, well, we are not going to allow the EU, or in other words, we are going to be overwhelmed with imports from the EU, because this time around, we were not going to go to their market duty-free, quota-free. They were also going to have the opportunity to come to our markets. That opportunity is still there, but what are we doing? If you look at the current top 10 export of Ghana to the EU, let's all look at it. I don't think these are very interesting. Cocoa beans, cocoa butter, cocoa paste, cocoa powder, petroleum oils, prepare or preserved tuna, raw aluminum, bananas, vegetable fats and oil, guavas and mango. These are what is going, and EU is our major trading partner, followed by currently the Chinese, the Indians, and the Americans. Right. So benefit from AfCFTA is not automatic. Please let's move forward. The benefit from AfCFTA is not automatic. Now, herein comes the critical role of finance. So the capability of SMEs to produce in order to maximize the export benefit is what is key. And I don't know how we can do that without finance. That is why I said I happen to be part of the team that from 2016 to 2019 drafted the whole AfCFTA agreement. And so I have very fresh institutional or negotiations memory of how the issues were raised and addressed passionately and emotionally. How do you support the private sector to produce, to export? This is the question. And how can we do that without finance? So there's the need to support value-added production. Because the fact is that if you don't have products, you cannot trade. It's as simple as that. What are you going to sell if you are not producing? You are just going to import what others are producing. And that is what we are experiencing. And we are all experiencing also the consequences of that in our country right now. Almost everything coming into this country. The little foreign exchange that you have will go away. We will experience inflation. This is not rocket science. It's basic.
Expanding intra-African trade through better harmonization and coordination of trade liberalization and facilitation regimes. Resolving the challenges of multiple and overlapping membership and expedite and continental integration process. Enhancing at the industry for opportunities for scale production, continental market access, and better reallocation of resources. SMEs in Ghana will play a key role in harnessing the opportunities offered by AfCFTA in view of their significant importance in terms of employment generation and contribution to output. In this regard, I would like to commend CUTS-GIZ for the effort to undertake a research study on improving framework conditions to unlock the potential of AfCFTA for SME in Ghana, and inviting relevant stakeholders to discuss findings of the report and seeking their input and recommendations on improving SMEs' access to trade finance. With these introductory remarks, let me highlight the key role of central banks in the implementation of AfCFTA. It is important to note that the full implementation of AfCFTA is ultimately expected to promote economic growth and poverty reduction across the various African economies through various channels. First, there is likely to be stronger regional competition along increased transfer of technology and knowledge, which will support productivity and growth. Second, increased efficiency will drive down production costs and prices of tradables. Third, there will be increased opportunities for diversification, while risks are shared regionally. Most importantly, increased foreign investor interests in the continental market size may also call for decisive macroeconomic management policies to strengthen economic fundamentals and attract additional investment. The Bank of Ghana is fully aware of the possible implications of AfCFTA on the financial sector and is committed to carry out the primary mandate of implementing monetary policy to achieve price stability and contribute to the promotion and maintenance of financial stability and ensure a sound payment system. Based on this, the bank has a direct role with respect to the AfCFTA to ensure that international financial transactions take place seamlessly. A stable macroeconomic environment is a necessary condition for sustainable intercontinental trade in Africa, just like any other region in the world. In fact, trade thrives among stable economies that are experiencing sustained growth.
Good morning to everyone. So from an AfCFTA perspective, we've been having collaborations with entities like the Secretariat, Ghana Export Promotion Authority, where we engage in to see how best we could support exporters within the non-traditional export sector, because we know that is the significant flow when it comes to export, and these entities are already exporting to the European markets. We've done engagement which are ongoing, and even aside the program, we do support SME significantly. I mean, since we started our SME banking, we've provided support over thousands of SME who are also into exports. Recently, we did a transaction for a cashew client who is into SME, was an aggregator. We were able to structure solutions for them to really release liquidity from their working capital to trade, even though it wasn't after. So we as a bank, we do support exports outside the program, and very committed in terms of how we collaborate with stakeholders to ensure we offer that needed support for those who seek to export within the sub-region. I think there are ongoing challenges that we need to surmount. Critical, I would say, within the West African sub-region, we have fragmented banking, relationships, and that would typically then also impact access to trade finance for these entities. And I'm happy that the speaker from Bank of Ghana highlighted the need for strong financial systems across the continent, because those are critical means that the banks could leverage, not looking at balance sheets of SMEs, which are very thin, and come up with innovative solutions, leveraging on risk on banks to be able to offer solutions to these SMEs. For instance, if a client is requesting a letter of credit from an importer, we could leverage on that and offer solutions without necessarily burdening the balance sheets of these SMEs. So those are innovative strategies that we are coming up with, and I'm happy to say that we are open to engage with these SMEs, but obviously the relevant due diligence will have to be undertaken to provide the needed comfort for us to come in. But yes, we are very much into the program, both from a group perspective and also obviously from a local perspective.
To help them to be able to choose the appropriate payment method to avoid they not getting proceeds from their exports. So that is one of the dedicated services that Zenith Bank we are providing. On the funding side, I think one of the good things that have happened in this space is the development bank facility that is available to banks for us to on-lend to operators in the SMEs. If you look at the rates that the development bank facility is giving, between 12 to 15%, that is way lower than what commercial banks are giving. Of course, the difficulty in that is that the liability is also on the commercial bank. So even though development bank is giving the facility to Zenith Bank to on-lend at a maximum of $5 million equivalent in CD, the approval have to meet the credit criteria of the bank. And it doesn't take away our basic credit requirements of SME, providing collateral, audited accounts, and all that. So what we are doing for audited accounts is to provide our SMEs with basic accounting tools that on daily basis you just make entries, and at the end of the period is self-generated accounts. These are some of the challenges that we have seen, and these are some of the things that we are doing. If you look at the development plan that I'm talking about, for instance, the African Guarantee Fund also comes in to provide a guarantee against any applicant, about 50%. So what you, the applicant, need to provide is 50%. And these are some of the things that I think that most of our SMEs, we are educating them on, and few of them have taken advantage of it. and I think that is going well.